All right, Erin, thank you so much for joining me for a little bit of a special bonus material video. I love the podcast that we just recorded. If you're listening to this and you missed our full podcast episode with Erin, go check that out on your favorite podcast platform. Here, though, we're going to talk about some best practices for food business owners and their bookkeepers. And I want to kick things off, Erin, with something that I see frequently, which is, when businesses sell utilizing Square or Stripe or one of the many other, third-party processors, the sale happens, the transaction is processed, that processor is going to take their fee, and then the remainder of that transaction amount gets sent to your bank account. And oftentimes I see bookkeepers are just downloading those transactions as total revenue numbers right into QuickBooks. And I am concerned often for my clients that this is not the best way to record revenue for a couple of reasons. And I would love a bookkeeper's input into, should this be happening? Am I right to be concerned? What's a better way to go about recording these transactions?
Yeah, absolutely. Yes, you should be concerned, because as a business owner, you need to know what your full line revenue was. And then you also need to know what I'll call it merchant fees, whether that's Stripe fees, Square fees, whatever. So those Stripe fees or Square fees should be down in your expenses, and your absolute gross revenue should be in your income. Because you need to know what that is, because you're basing your cost off of those revenue sales. So to me, that's the lazy way to do it. It's not the right way to do it. It's lazy. And you'll have bookkeepers that might argue, well, the costs are already taken out, so what difference does it make? Well, it makes a difference, because you need to know, what am I spending on Stripe fees? I mean, I see merchant fees add up a lot. Not that there's much we can do about them. They're all pretty much very comparable, but still, you need to know what that is, because that does affect your taxes and things like that.
Right.
And then also is splitting up those categories of income. So I know Stripe, you can have different categories of income. I don't like to go more than, let's say, 5. That's a lot. I took over a client's books one time that had 18 items of income. I'm like, this is a little crazy. But you also don't want one line that says services or sales or whatever, because you don't know what that is either. So knowing what maybe your delivery income is, your online income is, your e-commerce, whatever you've got going on in your business, your catering, whatever those may be, splitting those up and knowing what those true full gross sales are, and then seeing those expenses down at the bottom. So that would require your bookkeeper to have a Square or a Stripe. Okay, I will say Stripe doesn't have the best reporting, but there's some workarounds. Square, those pretty good. I go into a client's account every week or every 2 or 3 days, and what I'm doing, I can go real quick in the nitty gritty on this, is basically I'm chucking those net sales to what's called a clearing account. It's kind of a dummy account. So as they come in, they're getting recorded to a dummy account, and then I go in, I take that report out of Square, I get the gross amount, I get the fees, I get the income categories, and I do a journal entry, and then I clear out that net amount. So you don't, that net amount should not come up at the end of the month. It should clear to where all you have is these categorized gross sales and then your expense line item.
Right. I love that you bring up, the ability to, and the importance of tracking the different income channels or sales channels that you have. Again, for tax purposes, many of the listeners to the podcast are CPG brands that sell both, direct to consumer and then wholesale. And I tell this story often. I have a client whose books were, done the way we're talking about now. Everything was lumped into one sales line, and she was paying sales tax on her wholesale income, which was the majority of her revenue. And it was because it was all being, processed in a way and downloaded from the bank account rather than going to the source. And if you're collecting tax at the point of sale, right, then that information is also available to your bookkeeper in that Square report. And I believe that's important information for you to see as well.
Yeah, for sure.
Awesome. Thank you for that, because I think it seems like such a little thing, right? Well, the revenue is coming in, but I think there are implications, and there can be serious implications for some businesses if the bookkeeper isn't going through the right motions to get the most accurate information into the accounting software. And going back to something we talked about on the full podcast episode, you want to have information available to you that's important to you. So seeing things like my shipping income, as you mentioned, versus my shipping expenses, that's valuable information to someone who's doing a lot of e-commerce sales. And right now, I mean, that's the bulk of business for people. So I tend to think, if you're a business owner who's using ShipStation or, some other shipping platform, get detailed to a certain degree on what are these shipping expenses for? Are they for an online order, or are they for a wholesale customer? And similar to what you just described for Square, make those reports available to your bookkeeper so they can more accurately track your shipping expense, in the example we're using, rather than just waiting for that FedEx bill to come in and just lumping it all together and recording it that way. Now, if it's not important to your business for some reason to have that detail, I suppose then you can just record the FedEx bill and that's okay. But if it is important to your business, if you're trying to figure out how do we want to grow, how profitable is each channel, et cetera, then having that kind of detail can be important.
Absolutely.
What would be another sort of best practice that you think is important for people to think about in their food business? Is there something that you see regularly or that you need to fix for clients?
I would say, as far as things I need to fix, a lot of times I see what I would call click happy in QuickBooks.
Okay.
QuickBooks does an amazing job of marketing to small businesses and thinking it's easy. So I think business owners go in there and they're like, oh yeah, this is easy. I can just click add, thinking that, oh, QuickBooks is reading my mind. They already know where this goes. That is not the case. I have cleaned up so many major messes from that alone. So QuickBooks is reading your past history, and they're trying to make assumptions based on that transaction. So if there's a transaction, let's say, that came in from Chipotle, it's going to say meals. Well, that's true. And probably 99% of the time when it comes in from Chipotle, it is going to be meals. But let's say you ordered something from a Chipotle that's like, I don't know, a sauce or a spice or something like that. It's still going to try to throw that to meals. And if you're click happy and you're just going add, you're going to have a mess really quick, really, really fast. So, I mean, that's probably as an overarching, no matter what industry you're in, problem that I've gone in to clean up. Click happy in QuickBooks has been a huge one.
Yeah, I've heard some things from bookkeepers about, the sort of downloading of transactions is really not the best way to go about things. Partially because you've got that Square situation that we were just describing where the transactions come in, but they're not really super accurate. And in that same thing, like you're still going to have to go in and ensure that everything is really correct, categorized properly. So it's not just as easy as, okay, we're going to sync this and, get it done.
Yeah, so getting more detailed on everything, I think, and that requires more information. Your bookkeeper needs more information or access, one of the two, whether you provide it or give it to them. And that goes even to those transactions, everything they need that detailed so you can have your details in your reports.
Yeah. And you mentioned, again, back in the full episode, if you want a detailed profit and loss report, you can have that, but it's going to take information and conversations with your bookkeeper so they know what do you want to see, why do you want to see it. That's all beneficial so that they're serving you, as I like to say, reports that are meaningful and that serve you as a business owner, right? So you can make the decisions you need to make. Is there a risk of getting over detailed? I know some business owners use classes and really try to break down their numbers. Do you have any thoughts on that?
I honestly, I think being over detailed can be more or just as bad as being no details at all. So you don't want to necessarily, like I said, have 18 lines of income and then start spreading out every single office expense line item into its own category. So I think the biggest thing when you're looking at your P&L, you can very much customize your P&L. It's what is important to you, what income categories, not necessarily sales, but categories do you want? What kind of categories do you want on as far as expenses? Do you want just food and consumables or, things like your paper goods? Or do you want dairy, produce, meat, and then your consumables? And if you have like beer or wine, what is important to you? Definitely separate beer and wine from your food, but what are those important categories? Marketing is always a huge one. I have a client that we're not very detailed on many things in their P&L, but their marketing, this is where they spend the most money. Mm-hmm. We've got marketing and then several subcategories underneath that. So they can say, okay, we spent X amount in Google ads, we spent X amount in PR, we spent X amount of whatever. So start really thinking about what's important to you. I think income, no more than 5 buckets, but I think bottom line, that should always be, maybe you only have 2 lines of income. Maybe you do just have 1. Maybe you just do catering. But income, I think you should always separate. And then expenses is kind of more of okay, what's important to us? Cost of goods. Yeah. That should be a little, you should definitely get at least your food versus your consumables separated.
Yeah. And I love the point you made about, for some businesses, it might be, I always recommend, like you're saying, like your ingredients versus, your packaging and the other things, right? So you can really see the difference, make sure you're hitting the right targets for your business in each of those sort of major COG categories. But if there's no value to you in knowing what you spend on dairy versus what you spend on meat, then don't worry about tracking it, right? Like don't prioritize that as something your bookkeeper needs to track for you, and you can focus their attention on, here are the big important things. I love that you bring up marketing and getting detailed in marketing. I talk about, 3 signs that your financial report needs a revamp. And one of the signs is that your operating costs are just a simple alphabetical list. And there's like no subcategories and there's like really no detail, right? It's just the list that QuickBooks gives every business, no matter what their, what line of business they're in. Yeah. So I love that you bring up marketing and, especially as online businesses grow and as people have had to pivot and Facebook ads and other types of online advertising are becoming a part of our businesses, tracking that and seeing, if I'm trying to drive online sales, what am I spending on that? And how is it affecting, my income specifically for my online sales, et cetera, et cetera. So I love that. But I also love the advice against getting too, don't get too crazy. No, because if you get too simple, I always think of it this way. If you get too simple, you won't remember your P&L. Like you just, it's like mindless to you. If you get too detailed, you also won't remember it. Yeah. Or I'm sorry, if you get too simple, you won't really care about it. If you get too detailed, you won't remember it because you're looking at like 4 pages and you're like, I don't even know what I'm looking at. And you're about to go cross-eyed. If you can get your P&L down to 1.5 pages, I would say 1, but... Yeah. 1 page of meaningful information where you have, and you're going to do, at least for me, I do some calculations, right? Like, okay, what's, how much are my food costs as a percentage of my total revenue, right? I want to know that number. I think businesses need to know that number. What is my marketing spend as a percentage of sales, right? But when you have that spelled out for you clearly, the important things that you want to look at every month, when they're there for you, seeing those numbers, seeing those relationships and those calculations becomes super easy. And to me, that's that like extra layer of meaning that you can pull from your report.
Yep, for sure.
Awesome. Well, thank you so much for hanging around a little bit longer. I think these are 3 I think it was 3 really good tips, maybe probably more tips sprinkled in as we talked. Erin, thank you so much for joining me today. Where can the listeners connect with you and learn more about your services?
Sure. You can connect me. I am pretty active on LinkedIn. So you just put in my name, Erin Lehr. I should pop right up. My website is kpibookkeeping.com. And my email is erin@kpibookkeeping.com.
Amazing. Thank you again for joining us today. I am so pleased and so excited for everybody to listen into this episode and to the bonus content.
Thank you. I enjoyed it.
Awesome. Have a great day.